Hello and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from Heliogen. Please note, you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Sagar Kurata, CFO and Head of Strategy at Heliogen, which trades on the OTCQX Best Market under the symbol HLGN. Welcome, Sagar.
Thanks, Bob. Morning, everyone. Hope you're having a good week and had a great Thanksgiving. Listen, I think I have 30 minutes here with you today. I'm going to spend about 15 to 20 minutes making some prepared remarks on pages that you may or may not have already looked through, either from our second quarter earnings presentation and or our third quarter presentation. Based on that, happy to answer your questions as diligently as I would anyway. With that said, I'm going to start off the conversation just introducing you, if you're not familiar or less familiar with the company, on who we are and what we do. On this page, what you see is just the multi-dimensions of what we bring to the table and why we are here to do what we do. Our mission statement to start with is to decarbonize and enable a low carbon future, both for industrials behind the meter as well as front of the meter. We do that using solar concentrated thermal technology with storage, and add on to that our proprietary artificial intelligence software that enables for a differentiated market and a product. The market we address is highly and largely customizable to the customer needs. That could be in the form of steam and or heat being the primary recipient or the derivative of sunlight that we secure through our proprietary heliostats. We could then translate it to power being a large majority of the market that we address and we will be contemplating through our pipeline today and into the future. And a second derivative of sustainable aviation fuels that could be for hydrogen, that could be desalinating water, that could be calcination, in the case of heavy industrials, largely cement-based. And so the multitude of the first derivative of heat is plentyfold. The industries that we focus on to deliver this energy are a wide variety. It could range from food processing, oil and gas, very traditional, historically industries that have had a footprint and a carbon footprint for centuries, if not decades, ranging to heavy equipment, transportation, and technology data centers, which are much more nascent in the relative scheme of things. We deliver and go to the market using multiple offerings. Those offerings could range from turnkey customer-centric facilities, where we would literally do all the planning, the behavior, the schematics, to the construction, partnering with EPCs, etc. Or we could license the technology, and we can also own and operate. Now, some of this we do today, some of this we plan to do as the business grows and matures in critical mass over the next couple of years. But our offering has a wide range. With that said, the value of how we differentiate ourselves, and I'll speak on this a little bit more 2 pages from now, is the fact that we are vertically integrated and have the lowest market competitive LCOE that we are aware of, especially when it comes to long duration storage, and the modularity of our size and scale of heliostats versus what you would find in the marketplace more broadly. We are today closer to 150 people organization, and we are located both out of our headquarters in Pasadena, our manufacturing facility in Long Beach, and a strong constituency in Houston, where Christy leads the company from, just given that that's where our first project will be, and we have a strong base of talent there that manages a lot of the balance of plant. On that note, look, the addressable market we have is within those heat, power, and fuel, serving multiple customer inputs. So if you look at this page, as far as heat is concerned, we could deliver superheated steam applications that range all the way up to 550 degrees centigrade. When it comes to dispatchable power, we compete on price, and our price is competitively less than 10 cents a kilowatt hour as it relates to customer needs and the applications there within. Uh, and when it comes to fuel, the range of that fuel is broader or greater up to 10,000 miles, and that could be delivered in the form of heat with the solid oxidizer that we partner with in this particular case, as in how the customer demands it. Now, what differentiates us is very unique to what we bring to the table. First, let me touch on the operational side and then the strategic side. As far as the operations goes, we have a square foot efficiency of 30+% versus regular way PV. We don't have any thermal runaway risk, and our supply chain is not constricted by any rare earth minerals or materials for that matter, allowing for us the flexibility to incorporate our AI-enabled closed-loop tracking system and find the range of efficiency that you would generally expect, or better than what you would expect with other CSPs applications. We are on a strategic basis 85% recyclable, that allows for a lesser carbon footprint. We talked about the rare earth minerals already. I can elaborate more on LCOE in our private conversations. And our capacity factor ranges all the way up to 100% from zero. So to that degree, as we think about the industries we focus on, what the customers mainly are attracted to is the fact that there is limited degradation and a minimal auxiliary load on the business or on the platform. We operate at a very wide range of temperatures, certainly better than what you would expect from other competing technologies. The level of there is no limit to the depth of discharge. It ranges from 0 to 100%. And given that we have a fully integrated hybrid model, it allows for us to supplement existing PV as much as complement existing PV and storage with both our molten salt transfer of heat mechanism, generating power also by default from that steam, as you would expect to see. On that note, I tied on this a little bit earlier. The integration into our customers' operations include everything from plant design, planning it and building it, understanding what the use cases are, and delivering a ready-to-use asset sale with a long-term service contract. We expect to finance these plants both with equity investments that we currently have, and we can talk a lot more about that on our backlog, and either debt or tax equity, depending on the constraints and the qualifications of each individual project. And in the future, these partnerships will expect us to both sell our technology package as well as sell our proprietary software individually and collectively as need be. I'll take a moment to talk through what drives our long-term shareholder value. So on this page, and it's a busy chart, so I'll walk you through it one step at a time. You see the arcs ranging on the x-axis that go from core IP to the technology that core IP delivers, the partnerships that enable that technology to come to fruition, and the applications there within that we touched on page one. When you look at that core IP in the first sun ray, you see that our IP starts with proprietary heliostat design, which is 1/5 of the size of other heliostats that you find in the market. It reaches up to 500 degrees Celsius in temperature. We can produce it at high volume and low cost, making our unit cost competitive with anything else that you see in the marketplace. The modularity of our heliostats allows for an efficiency in the field design. And we have a fully automated facility in Long Beach that we'd be happy to give you a ride through if you're in the neighborhood. We did that, and we have accomplished this task with partnerships from ABB, Beckhoff, and Festo, and all of them enable us to deliver the solar collection and flux delivery that we currently generate. The combination of these heliostats with the second sun ray of the closed loop AI system gives us an opportunity to have software and plant controls that allow for a customer to deliver on specific point accuracy and a dynamic power delivery. We can do this with wireless controls that in our Gen 5 heliostats will be on an individual heliostat by heliostat basis, giving us the range of optimization depending on the weather conditions and the seasonality of the year. And the SoHot software is second to none, where we have a perfect image of the sky, helping us predict where to be, when to be, as it relates to the angle of the heliostat and the heat reflected there within onto the receiver. We have strong acknowledgement from Sandia National Laboratories on what we are capable of delivering. You'll see a lot more about that traction in the next week or two. So look out for that as it relates to press releases. And from our IP perspective, we focus on the rest of the plant as well, not just on our proprietary differentiators as it relates to patents and our technology. And that IP is about delivering on an integrated plant design, which allows for taking the heat that we secure through our mirrors and the receiver and translating that through a scalable, flexible model into the applications that finally the customer would have a use for. The EPC and partners from a technology perspective we work with are Sinair, Worley, Hanwha, that allow for us to, both in long term as we contract some of these existing prospects, allow for a fully built-in technology for over the upcoming couple of years. We are working on what would be entirely new white space for this particular technology, and that, in partnership with Woodside Energy based out of Australia, gives us an opportunity to be the leading conductor of Gen 3 CSP technology. We recently proved out phenomenal results with our particle receiver. This will be charged with supercritical CO2 versus molten salt, and that'll be the key differentiator both on an LCOE basis as well as on a capacity and efficiency basis. And the booked orders that we have, that we will delve into a little bit, are both today with Woodside Energy and the Department of Energy, DOE that is, plus City of Lancaster, as we think about a hydrogen application. So on that note, look, in the interest of time, I'm not going to touch on this in a lot of detail, but Gen 4 is the current heliostat, which is it has a intended lifespan of 10 years and has great visibility to what we think the production cost is. That'll be based both out of California and Texas for our backlog, and that's where we intend to use it to produce the application that we so desire. And the remaining 5 megawatts of the total 7 megawatts we have on backlog will be expecting to use our Gen 5 heliostats that will have a significantly more enhanced automation and the quality of beam, allowing for an intended lifespan almost 3 times at 1/3 of the cost of a Gen 4 technology. This will have a reflective area of 1.87 meters squared versus what is today 1.92, giving us more modularity and hence less single point of failure as it relates to the company's focus and projects. I want to take a moment to talk through what we have as our game plan here in the next couple of years. In 2023, We are intent upon establishing a full runtime efficiency and validating our software and plant controls at our existing facility in Lancaster, California. We are going to be operating this plant as a plant as opposed to an R&D facility, which is how we have generally fit to purpose up to this point, giving us an opportunity to demonstrate this incremental success in front of you through our earnings presentations on a go-forward basis. We will be showing the flux measurement and control and the repeatability of our software and plant controls through demonstrable data, allowing for the speculation around the operationalization of our product to be lesser and lesser as the months go by. In 2024, we have now construction underway to have an integrated balance of plant in West Texas. And there we are going to leverage all the learning experiences from our Lancaster plant to actually generate and produce and generate steam as a use case, giving both operating records to support performance guarantees as well as commercial negotiations with our customers as the pipeline flushes through into the later stages of FID and contract. The backlog that we have today with Woodside Energy, though the majority of that will be coming online in 2025 with our Gen 3 CSP. And that's going to be the game changer as it relates to the particle receiver, the transformation from molten salt to supercritical CO2, and the low carbon dispatchable energy, which will then help finance a couple of our key projects that we have secured land on, specifically what we refer to internally as Brenda in Arizona. And that's the game plan. And that's what we intend to deliver. So to deliver on that game plan, here is the backlog as it stands today. We have lead generation of 1.9 gigawatts with 17 customers. Now, in context, at the beginning of this year, if you had asked me that question in January when we started contemplating commercial existence and commercial focus and on a more systematized basis with Christy taking on the role of the CEO, we were at 100 megawatts. So it has grown 19 times where it was at the beginning of the year. And we have translated 7 of that into booked orders. Now, generally, we expect about 30% of lead gen over a 2-year period to translate into booked orders, right? So this, as of today, has an 18-month cycle remaining as we go through submitted proposals and pre-FID. And some of that is indicated as you look at the anatomy of the pipeline as it stands. In 2Q, when we started to discuss our pipeline in more mechanical detail, you'll see that our pipeline went from 825 to 1.9 and has seen at least double or more increase in all 3 buckets of submitted proposals and pre-FIDs across a wide range of industries and continents. The COD, because a lot of the projects we are addressing today are focused on COD for 2026, 27, and beyond, these projects will take time to come through as contracts and then build. So I'm looking at 18 months from where I sit today to get to contract, and then another 18 months to get to mechanical build. And by that definition, if I can focus on delivering on my backlog and revenue for the next 12 to 14 months, and for that reason, I'm fully funded from an investment and from a operating spend perspective for all through 2024, I'm going to see a natural accretion in both shareholder value as well as a show and tell story that Heliogen is today a position to be as we look at the forward-looking forecast for the 12 to 15 months into the future. Our power product that I mentioned earlier is gaining strong traction, and that's where majority of our focus will be. This power is both individually delivering CSP as well as hybrid with PV and storage in combination. And on that note, I'm going to bring the conversation to a conclusion by just reiterating that we have a very strong pipeline that's growing actively. We intend for that momentum to continue over the next couple of quarters. You'll see a lot more data about our operating of Lancaster as a plant in the upcoming quarters presentation. We did initiate groundbreaking in Texas, and by end of 2024, expect to be mechanically complete from an installation perspective for the steam plant. That is fully funded in our current financial pro forma. Our PV hybrid product, which is where most of our submitted proposals are, is gaining tremendous traction with our customers. That comes with thermal solar, thermal energy storage. The Gen 3 has made significant leaps of progress with our particle receiver, and the design verification there within DOE and Woodside have been an integral part of getting us there. We have executed on an $8 million annual operating cost reduction in the past quarter, giving us the capability of being fully funded, like I mentioned, for investment and operating needs through 2024. Our year-to-date revenue as of third quarter is about $6 million, and I expect that run rate to be the same for the fourth quarter as well, leaving us in the high single digits of revenue for this year and a few multiples of that next year as we translate the $70-odd million we have in backlog into revenue through progress milestones and executions. On that note, I see a few questions here from my perspective. I'm going to try and answer as many of them as I can. First question is, can you speak to the competitive environment for your green energy solution and provide some color around the scope and status of your IP protections? Absolutely. From a competitive environment perspective, PV hybrid solutions, we believe we are in a position to be uniquely competitive, arguably even one of a kind, to get there. I say that because when you think about PV on a standalone basis delivers, let's say, 4 hours of energy. That gets you grid independence for that 4 hours. You add on storage, and on a medium economical basis, you're looking at 4 hours of storage at which your cost and your return on investment is worth the capability and the technology to invest in lithium ion storage. But the minute you go beyond 4 hours, so that's a total 8 hours of energy independence, the cost of lithium ion becomes exponentially higher. What we can do, and where we come in, is with our thermal energy storage and CSP, we can charge while you're discharging your PV. So let's say it's a PV plus CSP, our TES can discharge for up to 14 hours beyond the 4 hours of PV that you get, giving a minimum long duration energy storage capability and energy independence to match to the grid resilience for 18 hours. We believe, based on what we have as operating models, that 18 hours could range all the way up to 22 hours of grid independence. Nobody else can do that on a cost competitive basis. And to the point I made earlier, we can deliver all of this at sub 10 cents a kilowatt hour, giving us price competitiveness, hence LCOE, grid independence, and time to install in locations where they already may have PV or are contemplating new projects as a greenfield, if not a brownfield. So from that perspective, the modularity of CSP that we bring to the table gives us a range to go anywhere from 5 megawatts to 500 megawatts. Now, the ideal projects we are looking for are about 50 plus megawatts, but that's not to say that we can't expand upon multiples of that as we grow through. So our backlog is predominantly going to be PV hybrid solution, and we are seeing a lot of receptiveness globally from customers. Bruce Hi, Sagar. I'd love to see the facility in Long Beach. I'm based out of Los Angeles. Absolutely. Please do reach out to Louis Baltimore. He is on our website. We would love to host you, and we can talk you through our facility and bring you in on an as needed basis. Also, can you talk a little bit about the time frame for production-ready thermal energy storage? Our thermal energy storage with molten salt is ready today. It's ready to be deployed. Molten salt is not a new technology. It is a technology that others have used over a period of time. What is proprietary to us is our closed loop AI enabling system, along with our proprietary heliostats. The We think of molten salt as a commodity technology that is pre-existing, and we can bring to fruition in integration with our proprietary pieces and components. And where we do come into proprietary TES is with our supercritical CO2 and the particle receiver. That's entirely white space today, and we are miles in front of anybody else. And with our Woodside backlog that we have and contract that we have, we expect for that technology to be commercially ready in 2025, which is what you saw on the earlier page. From Bill, hi Bill, are you able to access any government grants? Absolutely. We are in a sweet spot for all things IRA and or government grants, giving us a price competitiveness that could range, or a cost competitiveness that could range from 15 to 25% of the incurred costs. And we expect to fully maximize on that through the currently available programs. What is the makeup of ownership of Heliogen? Any strategic owners? Look, I can go through the top, call it three owners. Broadly, I want you to think about it as 51% of the company is institutional ownership, about 49% is shareholders with a wider base. The institutional ownership is from the likes of Nanchi Power, which is a private company with a very large focus on ESG and energy as one of its primary investments. They have been a very long-term investor in the company, 5 years plus, along with Idea Lab. And Idea Lab is the ownership from all the way from when the company was founded. They too primarily constitute the institutional ownership of the 51%, and they have been long-standing shareholders and partners of the company. The third one is Prime Movers Lab, which also is in that same 51%, and again, a long-term shareholder of the company before even we were public, and they continue to be on our cap table. And we are very grateful for that, because that tells me the reliance and the confidence in the technology as it stands today. By the way, with Nanchi specifically, we have up to $5 million of a contract to deliver on a variety of engineering projects that is not a part of our backlog, but is more elaborated in our second quarter earnings presentation. So there are financial and strategic investors as well. How much of an owner is Bloom Energy in the company? Bloom Energy is a vendor to us. They provide the solid oxidizer to the extent that we need to deliver on hydrogen, which is relevant to the project we have in Lancaster, California, with the city of Lancaster. They are not an owner of the company. Neither do we have any expectation of such from them. They are strictly somebody we do business with to deliver a solid oxidizer, and we are the customer in that particular relationship. Those are the only questions I see up to now. Happy to answer any others. Otherwise, I think we are almost on time, and hopefully you found this helpful, and I look forward to seeing some of you or all of you in our private one-on-one